Salaries basis income statement is not complicated, but you need to understand some adjustments. So here we have 5 adjustments. So this question is taken from O-level accounting past paper. Before we dive in here, let us have a look at the question. Zamir is in business providing legal services. Zamir provided the following from his books of account at 31st December 2022. So here we see many trial balance items. So here we have additional information, means here we have 5 adjustments. Okay, so here in the salaries business income statement, what we take, what is the main source of income? It is not sales, it is fee for providing services to the clients. Okay, so here on the list of balances we have first item, it is fee income, $151,750. Okay, so this is only we have income here, and others all we have expense. Okay, so first of all we will write the income, then from the income we will subtract all the expenses to calculate profit or loss for the year. Okay, so this is the format here, detail. We write all the things here, items here, then we have $2 columns just to facilitate our calculations. Okay, so let us write here first item, it is fees income. So here we will write in the last column the amount given here, $151,750. Okay, so now from this income we will subtract all the expenses one by one. Okay, so here let us write less or minus expenses. Okay, so what are expenses here on the question? First one here, rent and rates, it is $26,000. We have salaries, we have stationery and advertising, electricity, bank charges. These all are expenses. Okay, so we will write them here one by one. Okay, so first one we have here rent and rates. So let us write here rent and rates. So here on the question we have rent and rates $26,000. Okay, so we will not write this amount here because we have 2 adjustments regarding this rent and rates. Okay, so here number 1, adjustment number 1, the annual rent is $16,000. Okay, on 31st December 2020 rent was paid to cover the period from 1st January to 31st March 2021. Okay, point to be noted, the rent is paid until 31st March 2021, but here we are doing income statement for the year ended 31st December 2020. So here we paid rent in advance. For how many months? So January, February and March, until 31st March 2021 we paid. Okay, so here 3 months. So we need to calculate 3 months rent. Okay, so here on the adjustment it is also mentioned that yearly rent is $16,000. Okay, so here $16,000 was paid per year. So here we will divide by 12 and multiply by 3. Okay, so here we will calculate $4,000. Yeah, this is the rent paid in advance. Okay, so this amount is paid for next financial year. Okay, 3 months in next financial year. Okay, so here now from $26,000 we will subtract this $4,000 as it is an advance. Okay, so here we get $22,000. Okay, so still we have one more adjustment about this amount. Okay, this item. So here number 2, rates of take $6,000 were paid during the year to 31st December 2020. This payment covered the period 1st January 2022 to 31st October 2020 only. From 1st November 2020, annual rates were 7,560. Okay, so until 31st October, the annual rent was $6,000. Okay, after October, that means from November to December, the rent is increased to $7,560. Okay, so here rent is not paid until 31st December. Rent is paid until 31st October. Okay, that means November and December, these 2 months rent were not yet paid. Okay, so that means it is an outstanding rates. So these outstanding rates we have to add to this amount. Okay, rented rates. So here now how to calculate. So the amount, the new amount, okay, so it is $7,560. Okay, earlier we used to pay $6,000. Okay, so from this amount now we will calculate 2 months rates. Okay, will be added with this. So here if we divide by 12 and multiply by 2, we get here $1,260. Okay, so now we will add this amount to this. Okay, so here $1,260. So if we add up these two amounts, we get $23,260. Okay, so this is the final amount for rent and rates. Okay, so this type of adjustments are very common on the exam, so you need to understand. So let us write here now 23,260. Okay, so great. Then we have here, so here we have salaries. It is $55,000. Okay, let us write here salaries $55,000. We have no adjustment about salary, so we will write this amount directly here. Okay, then we have stationery and advertising. It is $6,450. Okay, this is also an expense for the business. So let us write here stationeries and advertising. Okay, so here we have $6,450. Okay, then next expense is here electricity. We have here $8,000. Okay, same with electricity, we have no adjustment. Let us write here directly electricity. The amount is $8,000 on the question. Okay, our next expense is here bank charges. It is $4,100. Okay, so bank charges, another expense, you know. So let us write here bank charges $4,100. Okay, what do you have next? We have here office equipment. Maybe we have depreciation. We'll check later. Bank overdraft, trade receivable, capital drawings. Okay, here we have some assets, current and non-current assets. So next tutorial I'll show you the statement of financial position, means balance sheet, only asset section. Okay, because many of you make mistake when you try to place all the current and non-current assets in the balance sheet. Okay, so here we have finished. There is no more expenses on the list of balances. Now we will check adjustments. Okay, so number 1 and 2 we have completed. Number 3 we have here depreciation is to be charged on office equipment at 50% per annum using a straight line method. Okay, no depreciation is charged in the year of disposal. Okay, so we have here depreciation on the office equipment. It is a straight line basis. Okay, so on the question we have office equipment cost, it is $60,000, and next item is office equipment provision for depreciation $22,500. Okay, then we have here proceeds of disposal of office equipment $1,000. Okay, so these are the information about office equipment. We have three amounts. One is cost price of office equipment, another one is depreciation, and the one is disposal, which is $1,000. Okay, so this will be a bit confusing. So it is straighter method, yeah. So we don't have to think about previous year depreciation. We will directly multiply the cost of the depreciation by the rate. Okay, rate is here $15,000. Okay, so the cost price of the asset is $60,000. Okay, so we saw the disposal of office equipment $1,000 on the question. So let us see the adjustment. We have any more adjustments are there or not. So number 4 here we have in February 2020 office equipment was sold for $1,000. Okay, we saw this in the list of balances. This equipment had been purchased for $1,800 on 1st January 2018. Sorry, the sales proceeds have been debited to the bank account and credited to the proceeds of disposal of office equipment account. No other entries have been made in respect of the disposal. Okay, so here we have disposal related something as well. Okay, I'll show you later. So here we sold this equipment for $1,000, but cost price of that equipment was $1,800. Yeah, so this 60,000 is no more in the business. Okay, from here we sold equipment for $1,000. So we have to subtract this $1,800 first of all. Okay, to calculate our existing, the current cost price. So here if we minus 1,800, then we get $58,200. Okay, this is the cost price of the equipment right now. Okay, now what to do? Now we need to calculate depreciation on this amount. Okay, so let us multiply by 15% here. So what we get? $8,730. Okay, this is the depreciation of office equipment. Okay, so let us write here depreciation equipment. Okay, so we calculated here $8,730. Okay, we wrote this amount here. Now we have disposal related something. So on the list of balances we have disposal of office equipment. It is $1,000. So here now we need to calculate the loss or gain on the disposal. Okay, the cost price of disposed asset was $1,800. Okay, it is given on the question. Okay, so this asset we sold for $1,000. Okay, so now how to calculate loss or gain on the disposal of non-current asset? It is simple. The cost price of disposed asset minus depreciation minus receipt of cash or bank, means the selling price. Okay, so here the cost price of the disposed asset was $1,000 minus the cash or bank, the cash we received after selling, it is $1,000. Okay, so how much remaining? It is $800. From this $800 now we will subtract the depreciation. Okay, then we will be able to know the loss or gain on this disposal. Okay, so this depreciation on this disposed asset we need to now calculate. So here it is a stated method of depreciation. So this asset was purchased on 1st January 2018. It is on the question, and sold in 20. Yeah, so here 18, 19, for these 2 years we will calculate depreciation on this amount. Okay, so here $1,800 is the cost price. We will multiply the rate of depreciation. It is 15%. Okay, for first year we get depreciation Here we get $270. This is for 2018. And 2019 again, as it is a stated method, we will just multiply the rate. So same amount we get in second year, 2019 it is $270. Okay, 2020 it is sold, so we don't have to calculate depreciation in this year. Okay, now if we sum up this depreciation, how much we get? We get here $540. Okay, this is the depreciation of this disposed asset. Okay, it is $1,800 the cost price. Okay, so now if we minus this depreciation from 840, so we get here $260. Okay, so this is the loss on the disposal. Okay, this value we will show on the expense section of the income statement. Okay, so see the cost price, it was $1,800. We could not recover this $1,800 with the depreciation and the selling price $1,000. So it's still remaining $260. Okay, this will be the disposal, a loss on disposal. So this calculation will be very complicated to many students because you don't know how to calculate this. So I have many tutorials on the disposal of non-current assets. I'll put the link in the description box. You can watch it. Okay, you'll be able to learn the disposal of non-current asset. Okay, how does it work? Okay, so let us write here now loss on disposal. Okay, so we calculated here $260. Okay, so here one more adjustment we have, number 5. One of Jamir's clients has become bankrupt. The client owed $1,885. Jamir does not expect to recover this amount. Okay, so $1,885. Okay, so this amount cannot be recovered, so this will be an irrecoverable debt. Okay, we will show this amount as an expense in the income statement. So let us write here, you can also call it bad debts. Okay, it is also okay. Let us write here irrecoverable debts, $1,185. Okay, so we finished writing all the items, all the expenses here. Now we will calculate. So first of all, we will sum up this all expenses. Okay, so we get here $107,685. Okay, this is our total expense. Now we will subtract this expense from this income. Okay, so here we see our income is much greater than expense, so obviously there will be a profit for the year. So here what we get, if we minus this amount, we get here $44,065. Okay, so this is our profit for the year. So let us write here profit for the year. Okay, so this is how you have to prepare income statement for service basis. Okay, so next tutorial will be very important. There I'll show you how to represent asset, means non-current asset and current asset, in the statement of financial positions.